Hello and welcome into the KE Report. I'm your host, Shad Markwitz. And today we're getting an update on UEC, Uranium Energy Corp. It's traded on the NYSE American under that ticker, UEC. And I'm joined with Scott Melbye, Executive Vice President for Uranium Energy Corp. and also President of the Uranium Producers of America. And Scott, we've been chatting at some conferences this year, and it's great to get you on the show to introduce UEC to our audience, but also to dive into the macro developments in the nuclear power and uranium supply chains. And I just want to kick it off with some general thoughts on the sector before we dive into the company. There's a lot going on in a lot of tailwinds as far as nuclear power. You've seen a lot of the UN countries commit at the COP28 or COP29 conference to tripling uranium output by 2050. So a lot of big promises there, but there are a lot of reactor builds. There's reactor life extensions, there's reactor restarts, there's interest in small modular reactors. So there's a lot of demand pull. And on the supply side, things are really crimped. You've got the Niger issue, the crimped French supply. You've got Kazakhstan, Kazatomprom, that hasn't really been able to meet their output guidance, but they have promised more uranium to China. Less so for Cameco with their JV. They're off a little bit there. You've got Russian sanctions. You've got Russia returning the favor by denying export of enriched uranium fuel. You've got Japanese reactors restarting faster than people expected. I mean, if you look back a couple of years, or if we time traveled back 5 to 10 years and we told people all of these factors coming together, it's really a perfect storm for nuclear power and for uranium. So I'd love to just from a high level get your thoughts on what you think is important and what you think is moving the needle in the year to come.
Yeah, well, Shad, that's a great summary of frankly the fundamentals and the investment thesis around uranium and nuclear power. Probably the best that I've seen in my 41 years of being in the uranium and nuclear energy business. It really is just a combination of so many things. You know, we always knew that nuclear power was abundant, affordable, reliable, and resilient energy. It was just kind of getting the broader world to understand that. We'd always, kind of hovered around 50% acceptance rates in terms of acceptance polling around nuclear power. But really, a couple things have changed all that. The transition to green energy really, and again, it kind of gravitates towards the political left, whether it's, the Democratic Party in the United States or the political left elsewhere in the world, really were not supportive of nuclear power until they saw how difficult or impossible it will be to achieve carbon emission reductions without nuclear power. So, to have now nuclear energy supported by both the political right and left, I think if you're on the political right, you love nuclear for its abundant, affordable, to use the Trump terminology, as its role in an American energy dominance policy going forward. Nuclear certainly has broad acceptance that we've never seen in my career. Geopolitics impacts our industry probably more than any industry I've ever seen, with Russia being a major supplier to the West after the breakup of the Soviet Union, being about 40% of enriched uranium supply to the West. But, in the United States, 20% of our electricity comes from nuclear power. 50% of the uranium to power that 20% comes from Uzbekistan, Kazakhstan, and Russia. So we really have grown on a real dangerous reliance there. That's been addressed by bans and embargoes. And then we have China emerging as the fastest growing nuclear energy country in the world, surpassing the US by the end of the decade. So a lot going on. And then just the nuts and bolts of supply and demand fundamentals that you would measure any commodity by, production, consumption, inventory, secondary supplies. That's gotten so far out of whack now that we're in a 50 million pound plus structural deficit going into this period of hyper growth. So, things have never looked better in terms of where nuclear energy is going, higher uranium prices, and uranium investments looking extremely bright.
Well, it's interesting, Scott, because a lot of these background fundamental factors have been building for years, really. Like we've seen the secondary supply market dry up with the underfeeding from Russian, like when they're spinning those big
centrifuges. The overfeeding factor. Yeah, certainly. Yeah. We've seen so many factors. We've been in a structural deficit in uranium for many, many years. But what didn't matter in the past when we had such an overhang of inventories and secondary supplies, the fact that mine production was not keeping up with consumption didn't matter because there were inventories filling the gap. But now with production discipline that really kicked in 2017, now trying to, reverse that trend, and mines are struggling to get back up to, guidance in terms of their desired production levels. But we've also had speculative buying by Sprott Physical Uranium Trust, Yellowcake out of London, and other companies that have basically drained the pool of available inventory to the market to a point where we now need new mine production. And it's not easy to bring on a new mine in any commodity, but uranium, the lead time can be, 7 to 10 years to bring on a mine, considering the permitting, licensing, and construction. So yeah, we're in a structural deficit that will eventually be resolved. Higher prices will solve, is the fix for higher prices, but we're not like copper or silver or other more mature commodities where there's a lot of standby mines that can respond to these price signals quickly. This is years in the making in terms of this bull market cycle we're in.
Well, and just add another layer onto it, a lot of people thought that maybe the uranium cycle had run its course and that, we saw the big pop up to triple digit uranium up to 106 briefly. It then pulled back into the 80s. And people thought, well, maybe that was it. And then you layer on all of these tech companies coming out in the last couple of months and suggesting that, hey, to power the AI revolution and the massive power requirements, and if you want to do that in a more green way without the carbon footprint, and just from a baseload power standpoint, really, you're probably not going to do it with solar. You're probably not going to do it with wind. You're going to have to do it with nuclear or nat gas plants. And nuclear seems to be getting the lion's share of the focus. Microsoft, Google, Oracle, Amazon, all announcing that they're either going to be looking into small modular reactors or partnering with utility companies to restart reactors, including the famous 3 Mile Island. Microsoft announcing they'd like to get that up and running again. So that added this whole tech layer to it. What do you make of the recent developments, which gave a new breath of fresh air to the sector?
Yeah, I think this fundamental may be even bigger than the green energy transition because it has elements of both. I think a lot of these hyperscalers and tech companies, they may rely on natural gas, for immediate energy needs, but I think, they want to see the development of small modular advanced reactors to power, 5 gigawatt data centers like Oracle is talking about, Google, Microsoft, all these companies. And, it really is profound, and it goes beyond just nuclear power. I think the United States has not seen electricity demand growth since the early 2000s. And the only thing we've been building on the grid due to tax incentives has been wind and solar, which has efficiency rates of 25-30%, availability rates on the grid. That's not what we need now that our reserve margins have been drawn down by just the electrification of society, homes and businesses, electric vehicles, and then this data center demand, which, I look at a place like the Commonwealth of Virginia, where 20% of the electricity produced in that state is being consumed by data centers today and going to 40% in a very short period of time. So someone is going to need to build power plants. And if it's not the electric utility companies, which are going to turn to not just small modular, but in some of those high demand growth areas, I think they'll be looking at large reactors again. But for the hyperscalers, many are saying, hey, I can't rely on the grid to stand between me and my multi-trillion-dollar market cap. I'm going to need to build my own dedicated power sources, and SMRs are an excellent way for them to go. So yeah, in terms of uranium demand, these new SMRs, will probably kick in a big way in 2030 on, but we could see as many as 300 of these, I think, and according to an NEI survey recently, almost 90 gigawatts of small modular reactor demand in the US. But, that sounds like a ways off, but the first of a kind units in Texas, Wyoming, Ontario, Canada are being built by GE, Hitachi, TerraPower, X Energy, and, have support by the US and Canadian government, UK government over there that are really helping get these first of a kind units off the ground and be demonstration projects that will kick in, enormous growth, like I said, around the 2030 time period. But that's coming at a time where we really haven't resolved our supply deficit in uranium. So, we need to build a lot of uranium mines between now and 2030. Beyond 2030, it's an enormous need for new mine production. So, for companies like UEC, not only are we based in the United States and Canada and Saskatchewan, we've got mines that are fully permitted, licensed, and we're bringing them into production as we speak. So our timing couldn't be better. We had to be very big contrarian players in this regard, acquiring these assets when we did at the bottom of the cycle, but then getting them ready with the luxury of time in a bear market to get them permitted, licensed, and ready to go, like our Wyoming Christensen Ranch Irrigary project, which has gone into production this past August and ramping up. So, yeah, excellent timing in terms of our production rollout.
Well, I do want to dive into UEC, but just one more question on the domestic side of things in the U.S. Since you are the president of the Uranium Producers of America, and Trump has been very vocal on deregulation, being pro-extractive industries, pro-energy dominance, as you mentioned, in the United States, there's a lot of focus, and with all these tech companies, a lot of them being based in the U.S., and the U.S. reactor fleet being one of the larger countries in the world, it seems like there's a perfect storm behind U.S. domestic-based production. There's only a handful of companies that can even meet that. There's some of your peers like Energy Fuels, Encore Energy, Your Energy, Peninsula that are also going to be contributing. What do you think, just as a collective group, the U.S. production profile could look like, not just next year, but maybe over the next couple of years?
Yeah, it all comes down to production from secure jurisdictions. And, there's nothing more secure these days than the United States, obviously at a major demand center, but with our regulatory environment, which isn't easy, but it's fair. If you follow the steps, you'll get the permit to build and operate your uranium mine. We also feel very strongly about Saskatchewan, Canada. These are going to be the biggest beneficiaries. And as the head of the Uranium Producers of America, I'm quite proud to be able to report that 6 of our member companies have restarted uranium operations in the US. Now, the ramp up is gradual, but that's a really strong signal considering we were producing essentially zero uranium domestically, importing all of our needs in recent years. And, I think this industry, these 6 companies, you named some of the companies, these are very competitive. Many of them are ISR, in situ recovery focused companies with very low environmental impact and very competitive costs of production. These aren't huge capital lifts. And if the projects are already permitted and licensed, it's not surprising US mines are some of the fastest movers in this uranium market recovery. And, in terms of, I've been asked the question in testimony before Congress, well, under supportive policy and strong market conditions, of which we have both now, what do we see as an industry? What do we see the potential for domestic uranium mine production? And polling our members just from existing licensed permitted mines, we see visibility to 20 to 25 million pounds of production from the US, not overnight, but by 2030 onward, just from existing mines. Now, we have a whole host of membership that are in the exploration and development phase. And if we get the Trump administration streamlining regulatory processes and ideally getting uranium back on the critical minerals list, we could see production in the United States exceeding that 20, 25 million pound rate. But that gives you an idea of where we're headed. In terms of Uranium Energy Corp, we look to be anywhere from 5 to 7 million pounds of annual production by 2030 from our production centers in Texas and Wyoming. So it sounds quite aspirational, but I think when you see the industry get up and running, that's a goal I'd love to see achieved.
Well, let's dig into Uranium Energy Corp and your production profile. And you mentioned in situ mining, which for people listening in, that's where the fluids are injected into the ground and recovered through wells. So it's really pumps, fluids, and wells pulling the uranium out. But you do have hard rock interests in both Canada and even South America. And so I think it's interesting to point out that the in situ mining, less disturbance, easier to get into production, but some of the high grade in the Athabasca Basin that you have exposure to could be some longer range value drivers. Let's start with the U.S. production profile, though, particularly what you have going on in Texas and Wyoming.
Yeah. So as I mentioned, the Irigaray Christensen Ranch operations, which we acquired from Uranium One in the Powder River Basin of Wyoming, those were the famous assets that were sold to the Russians in the Obama administration and the whole Clinton Foundation scandal around that. We were thrilled to buy it back from the Russians just 6 months prior to their invasion of Ukraine, and to be having over the last 18 months significant hiring in and around places like Casper, Gillette, Wyoming, where we've hired over 50, 60 people to ramp those operations up. We began injecting sodium bicarbonate, these very environmentally friendly solutions. It's like a Perrier water, which basically oxidizes the uranium in the sandstone off the grains of sand, dissolves it off the grains of sand, pumps it to the surface, runs it through an ion exchange column, and resin beads then attract the uranium, and we truck that, in our case, anywhere from 50 to 100 miles from our now 3 production centers, 2 in Wyoming and 1 in Texas. So the ramp up in Wyoming, we have a plant there that we're looking to expand the capacity. The license capacity is expanding to 4 million pounds. And the reason we'll have such a large production capacity at Irigaray is the potential to produce not only from Christensen Ranch, but Ludeman, Moore Ranch, and Reno Creek. So over time, you can see us ramping up to 1 to 2 to 3, 4 million pounds from Wyoming. At the same time, down in South Texas, where we got our start, the Hobson plant will be restarted and be processing from the Burke Hollow project, which we're building out the first, second, and third well fields at Burke Hollow, constructing the ion exchange columns for first production in the second half of next year. So there, the capacity at Hobson is also 4 million pound capacity, and we'll look to ramp up at first to 1 to 2 million pounds there and see where the market conditions lead us in terms of higher production. And then thirdly, we concluded, and we're just actually closing on the Sweetwater transaction with Rio Tinto that gives us a third mill and processing plant in the Great Divide Basin of Wyoming that will process conventional ores, and will make modifications for that plant to also receive loaded resins that could support ISR production in the Great Divide Basin. So very exciting times in the US over the next 3-4 years, really ramping up to, again, getting towards that 5, 6, 7 million pound annual production rate by 2030. At the same time, we recognize that the high-grade deposits of the Athabasca Basin are world-class, that we wanted to be involved in, and made investments in UEX and the acquisition from Rio Tinto of the Rough Rider project. So Rough Rider just came out with its economic study, which identifies it as a billion-dollar asset with 40% internal rate of return, $20.50 production cost, and production rates of about 6-7 million pounds a year, life of mine, on a 61 million pound deposit at 2.5% ore grade. So that alone, if it was its own company, would be $1.5 billion company within our portfolio. We're really excited to unlock that value. And this would be production coming in 2030 onward. But then you begin to see visibility to 12, 13, 14 million pounds of annual production in the next decade, making UEC one of the world's top 10 uranium companies, maybe knocking on the door of top 5. So exciting times. And again, all assets that were acquired, de-risked at the bottom of the market, been getting them ready for this moment. And now the market is behaving even beyond our expectations.
Yeah, you've perfectly poised the company to be able to capitalize on the domestic supply from both Texas and Wyoming. And like you say, even that third transaction bringing more production into the Great Divide area, both conventional and possibly ISR. And then I want to hone in a little bit on the Canadian portfolio that you got from UEX, just because I was following that company for a decade, and I thought they always had an interesting mix of different exploration and early stage development projects. I guess for the long game, obviously U.S. production ramping up to 5 million pounds over the next 5 years or so. But
Mhm.
looking at Canada, what does that bring into the mix here? What could, like you say, it could get up to 12 to 13 million eventually. But tell us about some of the assets that you think are most advanced or have the most promise in Canada in that portfolio in the Athabasca Basin.
Sure. Well, not only do we have the Rough Rider resources, and we've drilled out additional resources at Rough Rider over what Rio Tinto had identified, but we have projects like Horseshoe Raven, Hidden Bay. We have Christie Lake, which sits between MacArthur and Cigar Lake. Drill programs there hitting ore grades in excess of 60%. These are all projects that could feed a mill built at Rough Rider. And I think our resource base in North America today, with the conclusion of the Sweetwater acquisition and proving those up into the SK 1300 format in the US, we'll have over 500 million pounds of resources in North America, and I think about 275 million pounds of that is in the US, the rest in Saskatchewan. So it puts us right up there, probably behind Cameco and Orano in terms of total resources in the Athabasca Basin, and a lot of runway for not only production commencing in 2030 onward, but long life assets being able to produce, as I mentioned, in the range of 6 to 7 million pounds annually.
Well, and just maybe speak to more than any other company. I mean, I know there's other companies that have made acquisitions. Really, UEC has completely changed the portfolio of projects through acquisitions. I can think of three or four key ones that you've done just in the last few years. So maybe speak to that philosophy of bolting on projects to acquisition to become one of the larger players. And more importantly, Scott, will you continue to make new acquisitions?
No, it's a good question. I think the total figure that we've invested in our business in the last 4.5 years is now over $1 billion in M&A and uranium acquisitions. That's pretty significant, but it has more than quadrupled our license production capacity and more than tripled our resources. I think the time to make acquisitions was when uranium prices were 20, 30, $40 a pound. Acquisitions get more expensive at 80, 90, $100 a pound. So I think you can expect us to probably be less acquisitive and more focused on operations now, where now it's time to get production ramped up and achieve those goals at our various production centers. Having said that, if there were opportunities that were truly accretive to either Texas, Wyoming, or Saskatchewan, that would be a good fit. But I don't think we're going to be looking at, expanding in Australia or Africa or anywhere else. Our focus is North America.
Well, let's get a little bit into the team behind UEC. I'd love to learn a little bit more about your background in the industry. Of course, some people may know the president and CEO of UEC, Amir Adnani, but I think it'd still be worth reminding folks of his pedigree and background in the space, and then just any other people that you want to highlight from the board or management team.
Yeah, listen, the vision behind this company comes from Amir, and we call him a 19-year overnight success because that's how long ago it was that he founded Uranium Energy Corp in South Texas, and has seen this enormous growth under his leadership. So again, it's an honor and privilege to work with Amir and be part of this story. But we have a full team with hundreds of years of combined experience in exploration, discovery, mine development, operations, marketing of uranium, licensing, permitting, and folks that ran mine engineering for McArthur River Cigar Lake at Cameco, others that were involved in global geological exploration with Cameco, myself having 41 years in the uranium business, including 22 years running Cameco's global marketing subsidiary. We're taking all these decades of experience, and oftentimes with larger companies earlier in our career, and taking it to this particular company. And I think all of us would agree that this entrepreneurial phase of our careers is probably the most enjoyable and gratifying in that regard. So Again, we're a company that is not just assembling assets to sell them off to somebody. We intend to be an operating company, like I said, in that top 10 of global uranium producers. And we have the teams that can achieve every aspect of that goal.
Well, and let's also shift over to the financial health of the company. Give us a quick snapshot of the treasury, the balance sheet, but also who some of the top shareholders are, analyst coverage, just anything you want to tell us about the financial side of the business.
Sure. And again, having, achieved all this with such a rapid growth over these last 4 years, we get to this point with a very lean balance sheet and no debt, 300 million in cash, which has obviously enabled us to make these acquisitions. Much of that cash has been held in physical uranium. That's something that we did off the bottom of the market to acquire uranium at 20, 30, $40 a pound. That uranium, now worth 70, $80 a pound, $90 a pound. Selling pounds to make these acquisitions makes a lot of sense. In terms of liquidity, at a combination of 3.5 billion market cap on the NYSE and the second highest trading liquidity behind Cameco, we're now finding ourselves in the portfolios of very large institutional investors. Probably the best example of that is Norges Bank out of Norway, the sovereign wealth fund of Norway, I think one of the world's largest, taking a 5% position in the company. And we're certainly getting in to see much larger institutions than we would have when we were trading in the hundreds of millions of market cap. And so we have very significant institutional holdings: BlackRock, Vanguard, State Street, Fidelity, Norges Bank, Northern Trust, UBS. We're in all the indexes in a very big way in both the URNM and the Global X. We're covered by 6 analysts between Canaccord, 8 Capital, Wainwright, Roth Capital, Sprott, and TD Securities, all covering us, some of which have begun to upgrade their target prices for UEC based on some of these more recent acquisitions and kind of the realization, for example, of Rough Rider being $1 billion asset all on its own. So we've got really wonderful coverage and also very strong retail shareholdings, of which we met a lot of them in New Orleans last week at the investment conference. So again, very bright future for UEC, strong balance sheet, and all this growth now being realized in production startups.
Well, I guess let's wrap up with your final thoughts on how things look for nuclear power and uranium, but also where you see UEC positioned in the universe of companies that investors have a choice to take a look at for their own portfolios.
Yeah, listen, coming back to the start of our conversation, I don't think I've ever seen this strong of an investment thesis around uranium and nuclear energy. So, I mean, for investors, they need to be invested in uranium. That pullback in spot prices from 107 down to 77, that's a wonderful opportunity to buy in the dip. The trading in the spot market can sometimes be very small ball, small wave activity on the back of the longer trends. So if you see uranium equities trading down from their highs, that's an opportunity to jump in. I think UEC, with low-cost operations in stable jurisdictions and an unhedged book, don't forget, we have not locked in contracts over the last 5 years that would create, legacy contracts prohibiting us from realizing the full value of today's market and, more importantly, the future market. So probably the best exposure to the uranium story of any of the uranium equities. And again, we're excited for the future.
All right, Scott. Well, we'll wrap it up there for today, but a great overview of the macro drivers in the nuclear power sector, how that filters down into the demand for uranium, why it highlights and puts a light on U.S. domestic producers, and then obviously positioning UEC to capitalize on the production story, not just in the U.S., but also in Canada, with a whole pipeline of production, development, and exploration assets. For those listening in, if you want to follow along with the news from UEC, definitely click on the link below this interview. It takes you right over to the UEC website, straight to their news section. so you can follow along as market updates come out and hit the wires. Scott, please keep us posted on key milestones and developments. We'll get you back on for an update periodically and just talk shop about nuclear power and uranium demand, and looking forward to our next conversation.
Great. Thanks, Shad. Appreciate being on with